Shares of Roblox under pressure this morning after reporting a wider than expected loss in its second quarter. The company had net bookings of over $780 million and a loss per share of 46 cents. Joining us now, we've got Michael Pachter, Wedbush Managing Director of Equity Research. Michael, great to see you. Great to speak with you and grab some time as always. We've got a lot of video game companies that just reported earnings. Let's start with Roblox here. I want to get your high level take.
Their revenues are fine and their user base is growing. They're doing all the right things on the top line. They're just not as profitable as I think a $20 billion valuation implies they should be. And, in fairness, they actually told us they wouldn't be. They told us that they had intentionally, made the decision to invest in people and to expand, their safety, security, headcount, and to try to grow the business. So they're investing in growth. They told us to expect single-digit profit margins. They had delivered, the 30s pretty consistently, then dropping maybe to the 20s through 2021. 2022 was 12%. So when they said single digit, I think the street read that as 9%, and it came in at 4.9. So they really surprised people with how bad their profits were. And again, by design, I don't think that there's any surprise here, to the company. It's just a surprise to investors because people didn't take the CFO's warning seriously.
So what does Roblox need to do now? I mean, forget about the management of expectations. What do they actually need to do to boost back those margins and to try to forestall some of this either stagnating or even declining user growth?
The user growth's fine, and I actually don't think that we should worry about that. They're managing the business well. So they in fact, they're going to grow the way TikTok's going to grow. 13-year-olds are going to turn 14 and continue to use Roblox. So I'm not worried about, people aging up and continuing to play. They'll give people relevant content. What they have to do is take a page from the Andy Jassy playbook, and Jassy really blew it for about 6 quarters at Amazon, investing in stuff and underwhelming on profit, and they watched their profits decline, their share price get cut in half. He suddenly decided to deliver profitability, and as soon as he did, look at Amazon, it ripped. So if Roblox takes a page from that and says our shareholders matter, our employees matter, and all those people get compensated when our share price goes up, then I think they're going to deliver higher margins, and I think the stock will go up. Is that going to happen next quarter or the quarter after? Probably not. So we've been neutral on this thing for the past year because we actually took management seriously that they weren't going to deliver increasing profit. Anytime they want the stock to go up, let's start increasing profit.
So it sounds like, even though you've been neutral for the past year, that the reality might lead you to kind of change that rating in the near term if management doesn't change?
Yeah, I would love to be able to take that bait. Every earnings call is a new exercise in reviewing the model and thinking about it. If I knew what was going to happen, then I would have the perfect rating all the time. You, Brad, will remember I had a sell on Netflix for 10 years until I was proven right. So I'm pretty stubborn, and I like to see proof that things are turning around, and I did see that at Netflix, which is when I upgraded. I can't talk about my prospective rating until I have a note out later today.
Let's talk about the bigger video game universe then, because we got Take-Two numbers as well. I wonder if you like them any better at this point than you like Roblox. Those shares trading lower by about 2% today, and those numbers missing estimates a little bit as well.
Yeah, Take-Two is a really interesting story. And again, I've been around for over 20 years. They did this exact same thing back in 2011. They had a bad year coming in 2011. So when they got into a bad year, they said, but GTA is just around the corner, and the stock started to rip. They did the same thing this year. They never said the word GTA or the letters GTA, Grand Theft Auto. But they said, our revenues are going to be $5.5 billion this year, and then magically they're going to be, $8 billion next year. Well, they can't grow $2.5 billion without Grand Theft Auto. So the plain implication is Grand Theft Auto is coming next year. I actually don't think it's coming. I think it's coming the year after, because they just have never delivered that thing on time ever. But with that said, it's coming. It's in development. It's close. And so investors are pricing that in. and the stock's going to stay up. I don't think they can do anything to make it go lower. And the beauty of Grand Theft Auto is they have a really robust free-to-play business, online business built around Grand Theft Auto. If they start leaking out content on the online business that's going to be in the premium game, I think you will see their subscriber base grow by tens of millions, each paying $10 a quarter, $40 a year. So I could see $400 to $800 million of incremental revenue annually just by leaking out GTA 6 to their online subscribers. So again, the company is very well positioned with great content. I actually love the management team. They are the smartest in the business, and they don't tell anybody anything, which allows me to stand out and have these opinions because they won't announce anything.
So can NBA 2K then sustain until a new GTA comes out?
That's like asking if McDonald's hamburgers are going to keep the company afloat when everybody else has chicken sandwiches. I mean, it's their staple. So yes, of course. But, people are looking at the bright new shiny object, and that's Grand Theft Auto.
Right. And for the growth that a lot of investors are looking to see.
Right. You're not getting it from NBA. You're going to get it from GTA. NBA will allow them to grow by 1%. It's just not meaningful enough to drive overall top-line growth.
Michael, how does, just to go in a little bit of a different direction here, how does the Activision-Microsoft deal affect the competitive landscape for these other guys?
I think that the upshot of Activision-Microsoft is that Game Pass is going to become a much bigger business. And Game Pass is a subscription streaming service that Microsoft offers 25 million users. And to put that in context, there's about 250 million regular console gamers and about 400 million regular PC gamers. So if that subscription offering becomes more valuable, it's likely that fewer people will buy consoles in the future. And the companies that are leveraged to selling games only on consoles, like Take-Two and EA, not only, but primarily, they're going to have a smaller installed base to address. So they have to adapt as well. Microsoft will pay up for the content, but this is sort of like talking about, broadcast television reliant upon cable, and people are cutting the cord for streaming services. What do? And their mistake was they supported Netflix. I don't think anybody's going to support Microsoft, but I think these companies have to come up with alternative business models. And as I said, Activision is the best in class at managing their IP, intellectual property, across different distribution. Take-Two second. They have a really robust mobile business. They have a really robust PC and console online free-to-play business, and they're getting great at advertising. So I actually like Take-Two the best of the survivors because they'll adapt and they'll figure it out.
What is the next leg of growth in terms of medium for the gaming community, for the number of companies that you cover, and especially with the profile of gamers right now and kind of the demographic, or the makeup, I should say, of the community? Because I think that's what investors are trying to kind of lean into to figure out how they can see, to the best of their ability, into the future, and how that revenue and the margins on top of that are going to be generated. Because we're hearing less about the metaverse. We're hearing more about what AI in gaming might look like and all of these other things. So what does that
Metaverse is coming, but the gaming community was probably 500 million people back 20 years ago. And, then mobile phones turned that into 3.5 billion. So, you're going to get that kind of explosive growth if you provide access to people on a device that they already own. And that means game streaming is the next great opportunity. How many middle-aged men would love to play FIFA, but that's the only game they care about, and they don't own a console, or they don't own a high-end PC? They could play FIFA on their TV, streaming from their internet router. You're going to sell an extra 20 million copies of FIFA. So I really think Game Pass is the answer. And it's the same as Netflix. Like, Netflix has 225 million subscribers because it's easy. You turn it on, there's a button on your remote. It's so easy. So I actually think that's going to be the game changer. And I think a couple of billion people are going to access console games instead of 300 or 400 million over time because of services like Game Pass.
Well, I've played the trivia game on Netflix, but that's about it so far, Michael. Michael Pachter, good to see you. Wedbush, Managing Director of Equity Research. Thank you.